is my strategy in how I'm trading. We're looking for order block and chart patterns, and lastly candlestick patterns, whether it's engulfing or pin bar, but mostly I'll look for pin bars because pin bars, they're kind of more stronger compared to this thing, engulfing candlesticks pattern. Yeah, candlesticks patterns. So this is our bearish setup. In our bearish setup, we find ourselves with a bullish candlestick that is getting engulfed by a bearish candlestick, creating our supply zone here on a 1 hour time frame. This bearish engulfing candlestick is followed by 4 more bearish candlesticks, or better, it can be even more than that, but 4 more is far more enough, resulting in 5 candlesticks in total, bearish candlesticks in total consecutively. Therefore, price goes back up to our supply zone. That's where we wait to enter on a lower time frame. And the time frame that I like the most to spot this chart patterns is a 1 minute. So to reduce my risk and maximize my profit. So what basically is happening here is that I draw my chart pattern on a 1 minute time frame and wait for price to break out of this chart pattern and form just outside this chart pattern on a 15-minute time frame a candlestick pattern, which can be a bearish pin bar, which is a shooting star, or engulfing bearish candlestick. Therefore, I enter to the bottom, set my stop loss just above the chart pattern, and then take profit at the low of the last consecutive candlesticks. So on our bullish setup, here's what's going to happen. We're just gonna flip what we did, and that's just about what's happening when you are looking at our bullish setup. See, that's just about it. What we are doing here is that we are waiting for a bearish candlestick and followed by a bullish candlestick and 4 more or even more than that consecutive candlesticks of the same anatomy, which this one is bullish candlesticks. Therefore, we wait for price to come back to our demand zone, which is created by this bearish candlestick on our 1 hour time frame. Therefore, I go down to my 1 hour time frame, my 1 minute time frame. I go down to my 1 minute time frame to draw my chart patterns. Chart patterns, which is this one. This one is a falling wedge. That one of a selling setup. It was a rising wedge. This one is a falling wedge, because when it's falling, it signals that we are going to buy, giving us an edge, a confluence that we are buying on a rising wedge with our demand zone. To add more on this, we are waiting again for price to break on a 15-minute time frame with engulfing bullish candlestick or a pin bar, hammer bullish pin bar, and which swap what I prefer, and set our stop loss just below the chart pattern, which is the falling wedge, and then I put our TP at the high of the last candlestick. Yeah, that's just about it. Firstly, to wrap up, is that we are waiting for demand or supply zone, and then we are waiting again for a chart pattern, which is a rising or falling, even a pattern. Therefore, lastly, after we break our pattern,